Helicopter Ben Bernanke lied. He said that they would reverse course. He said they would back off. The Fed's balance sheet is over $7 trillion and there's no stopping it. What's different this time around is that the Federal Reserve is being celebrated. Their actions are largely regarded as heroic despite the fact that they have caused massive displacements, a misallocation of capital. But I guess don't fight the Fed. Invest for the long term. Be greedy when others are fearful. Stocks always go up in the long term. Your money is safe in the bank, and other fairy tales like that. You came here for the truth, so let me unveil that for you. Oh, that's gotta hurt. I know some people don't like what I have to say, but this is the truth. When we look into the real deal, we get the wake-up call. A lot of people don't want that cold water splashed in their face, but somebody's gotta do it. Somebody's gotta take the heat. That's what I'm here to do. Today, we're going to look a little bit into history and show you what Ben Bernanke had said a few years ago. I also want to cover what's happening with other central banks. I want to look at what's going on in the economy. I've got stock news. I've got a lot. Let's begin. Of course, the stock market rose once again. We had the S&P 500 going over 3,000. Everybody was cheering because everything is totally fine at this point. The issues that were going on earlier this year are not a factor anymore. Everything is totally fine. Investors need to understand these charts, okay? Left-hand side, the share of equities owned by the top 1% has been pro-cyclical. So essentially, when you have a bull market, the average person in the top 1% is investing in the stock market. You could see that. It is very clear on this chart. Right-hand side, the share of equities owned by the bottom 90% has been counter-cyclical. So they're purchasing in when everything is going down. When there's a recession going on, that's when they're buying in. And what do you think is happening today? We are seeing the retail traders piling in. The absolute lowest level investor are putting more money in now than they ever have before. This is not a good sign. If you are a 7 share of Amazon type investor and you're putting money in, that should be a warning signal to you that maybe something isn't right. Interview with Jamie Dimon here on CNBC. He had said, number one, the fact that JP Morgan is a fantastic company and it's a great buy. Sounds like a sales pitch. But he also said this: the Federal Reserve's unprecedented actions to prop up financial markets were like water that fills every crevice. I do think that the liquidity lifts up. It's almost impossible to measure the stock market and all asset prices. I have said this thousands of times, though the trolls seem to ignore it, obviously because they don't actually watch the video. But when you look at the Federal Reserve and what they have done, Fed money printing, Fed actions, that creates inflation. The inflation doesn't necessarily find itself in one place or the other. It goes all over. We can't necessarily define where it's going to go, but certainly price inflation is the result of the inflation of the balance sheets. And we can see this time and time again. Federal Reserve actions creates inflation. That inflation finds its way into the different assets, which of course could be real estate. It could be the stock market. It could be bonds. It could be anywhere. And we just see the cycles repeating over and over again. This, however, is different in the fact that the Federal Reserve did not allow asset prices to come down to a reasonable level. We had the highest valuations ever in history, breaking records from all the bubbles before it. And now the prices, they came down just a little bit, not enough, and they pushed up to even higher. So we are in the clouds right here, and they're saying, don't worry, because 2020, that's not going to be very good. There's going to be volatility there, though we haven't really seen much volatility in the last month, that's for sure. Everything is going to be a-okay because 2021, we're going to really rock it higher. I'm really worried about what it's going to look like if that's the case. Back in 2013, you actually had Ben Bernanke testifying before the Congress. And at that time, they were addressing the issue of the money printing, and they were actually being a little bit tough, saying, how are you going to wind this back? How are you going to stop printing money? Because this isn't right. You shouldn't be doing this. And we had a lot of people in the Congress that were going in this direction. Today, that is absolutely not the case. So just check this out here. While Bernanke did admit yesterday to the Senate Banking Committee that there's there's no risk-free approach to unwinding the $85 billion a month bond buying program, he shed a little light on how the QE measures would end. And I wanted to just stop for a second here. $85 billion a month. And at one point, they were printing up $125 billion every single day just recently. $125 billion a day. At this point, they were scrutinizing $85 billion in a month. We have really left planet Earth at this point. It's crazy. So here he is talking about how they're going to exit their QE policy. In terms of exiting from our balance sheet, a couple of years ago, we put out a plan. We have a set of tools. I think we have belts, suspenders, 2 pairs of suspenders. I think we have the technical means to unwind at the appropriate time. Of course, picking the exact moment to do, of course, is always difficult. Then they dragged it on for so long. If you remember, it was just going on and on and on. And then they said it's going to be like watching paint dry. It's going to be in the background, very, very slow, very, very steady. If anything changes, we're going to reverse course. They made that very clear for the longest period of time. And they bring this balance sheet down just slightly. I mean, it was ridiculous how small they brought it in percentage terms. And now, of course, you know exactly what's going on. They had to do the repo operations because the market was fundamentally broken last year, and that became obvious September 17th, I believe it was, 2019. They promised it was not QE, and it was, of course, a big joke. Then we had QE4 plus QE5, and whatever you want to call that. Is it QE9? I mean, at this point, it's ridiculous. It's just all a joke. Let's call it Susie. Let's stick with that. I think that's a great name. But I just wanted to show you this because a lot has changed since 2013. And now today, it doesn't look like they'll ever be able to reverse course. They're not talking about that. In fact, they're going in the opposite direction. Powell is saying, we will leave this low interest rate policy in place way after everything's back to normal again. So you know what they're doing. But they promise you that the core PCE rate, the fake rate of inflation that they use, will be at or around 2%. I should say below 2%. So you don't have to worry. I mean, that's fairly accurate for you, right? 2% increase per year, personal consumption expenditure. That's what they're trying to do. They're trying to measure that, and it's 2% or less. Right now, I can't remember what they use. I remember just recently it was 1.6%. So anywhere around there, I think that's a very realistic number. So we can all thank Powell. We can all thank the Federal Reserve. They're not creating enough inflation. So thank you very much. Speaking of the Federal Reserve, you can see this information at the Chicago Fed's website, and we're looking at the National Activity Index. And it might be hard to see on this page, but I'm going to try and highlight what we're looking at here. So you have this period, I guess it's 2011 up until the present, and there are fluctuations up and down, and if I were to remove 2020 from the equation, you would see that it is a bumpy road along the way. But today, we have gone to a level we have never seen before. This is down, I would say, probably minus 17 on this chart. It's ridiculous to see how unbelievable all of the different pieces of data, all these different indicators that I've been showing you, all pointing to the same thing. And they have the audacity to suggest a V-shaped recovery still. I'm still seeing that today. Jim Cramer said something about a V-shaped recovery, and it's just a joke. Please stop talking about it. My friends in New Zealand, this one is for you. They are discussing helicopter money handouts to stimulate the economy. New Zealand is considering distributing free cash directly to individuals as a way of policy stimulus to help boost the economy. This is what they do to boost the economy. They try to fill in the blank. I've shown you this just recently. So here's the growth, the fake GDP growth that they have. It doesn't matter what country we're looking at. And of course, we have this crisis of 2020. Everything is falling down, but they say say that don't worry, everything's going to go right back on the same trajectory. All we have to do is fill in the blank, and we'll do this with helicopter money. That's the solution. They haven't thought this through because you cannot print growth. You cannot actually print jobs, and this is the mistake that they make, at least what they tell the public. They should do other things. They should try to actually create something that is lasting, that has benefits, instead of printing money, going up in a helicopter Ben, flying around and dropping it from the top. We need sustainable actions. This is not at all. Lufthansa, the airline, is now partly owned by the German government. You could see what they had to do, of course, just like all of the other airlines. They're in big trouble. Anything to do with aviation right now is taking a hit. From what I gather, the flights are down 90% on average. And I've looked at the stats. I think I showed you the stats actually that were global, and it's about 90% when you see it, and you can't simply fix that. So what they're doing in this case here, Germany, is printing up 9 billion euro, more accurately deficit spending, it looks like, with their bailout package. The federal government will receive a 20% stake in the company in return for 2 board seats and veto power over any hostile takeover bid. Let's see what happens to this company as well as the others. LATAM Airlines, Latin America's largest air carrier, sought bankruptcy court protection in New York after the crisis obviously had a big impact on their business. You could see what's been happening here in the chart at the top. Many different companies are being hit very hard, unlike they've ever seen before. And some fantastic news for you, because we love the bailout companies. I keep seeing the comments all the time. I see it in the news all the time. The analysts, everybody saying bailouts are good as long as they're done right. Well, check this out. Hertz paid out millions of dollars in bonuses to its executives just before its bankruptcy, and a month after it started laying off thousands of employees. Here you can see the details if you're interested. $16 million to 340 executives on May 19th. Of course, in my personal opinion, I think it's okay for companies to do whatever they want internally. That's nobody else's business. But why are they getting bailout money directly or indirectly in this case here if they're going to be paying bonuses to people? That to me doesn't make sense. Justice Department closing insider trading investigations into 3 U.S. senators. We knew about the insider trading. It was going on. As far as I'm aware, it's 4 of them. 3 of them have got off scot-free. There's 1 left. We'll see what happens. Does it even really matter? They're always insider trading. Anyway, if you do that, you're in big trouble. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, I'm doing videos every single day. You got to check me out at The Money GPS. Learn how to sell online, but don't buy the $1,000 course. Don't buy the $2,000 course until you've gone through mine, because it's free. I break it down very simply. Check it out, theamazongps.com. If you want to understand the financial system at its core, then you need to understand what's in these 2 books. I break everything down that you need to know, the foundation, the history, the asset classes, everything's there. Check it out, link in the description. If you want the audiobook, themoneyGPS.com. Hey now, don't go anywhere. Have you seen this video? It's really important, a lot of detail. Check it out, click on it, I'll see you there.